Thanks very much, Francis. Well, despite those US bourses hitting highs yet again, there seems to be caution in other parts of the world. We're seeing a lot of red here in South Africa and in European markets. Obviously, as you mentioned, markets really looking to see and hear what the US Fed has to say about monetary policy. That decision coming out later tomorrow evening, our time. And basically, the market doesn't expect that the US Fed will move on interest rates, but that it may announce it's going to begin that unwinding of its $4.2 trillion balance sheet. And we'll get some analysis as to why that's important in any event. And the local currency is still on the back foot. I think you did mention that at some point earlier in the session, it breached 18 against the British pound, although it's come back a little bit, and it's been hovering around 13.30 against the US dollar. Let's take a look at the indicators.
We are so committed.
Well, I'm joined in studio by Travis Robson from IG South Africa. Thanks for joining us, sir.
Thank you for having me.
Good stuff. US markets hitting all-time highs, and obviously Japanese markets also doing quite nicely. But there does seem to be some caution in other parts of the world. Your assessment of what's happening?
Yeah, we're definitely getting good information coming out of the US with good earnings data, and also we're getting a good, happy feeling coming out of Asia with GDP numbers, stronger growth numbers, better numbers coming out of China. Those three economies are generally the largest consuming economies, and we're seeing a push in their local bourses that we've seen. Europe and UK are a little bit different. We've got implementation of regulatory changes coming in the financial sectors, so we're seeing financial stocks coming under pressure. We're seeing retail stocks also coming under pressure across the board. And generally we're just seeing weakness as we start to analyze Brexit, analyze what the changes are going to happen in the EU. So there's a lot of news coming out that's negative for the local economies in those countries, whereas you're getting more positive data coming out of the US and Asia and China. And investors will flick between the two. So an investor in Europe who's unsure about trading on the DAX, because now the elections are coming up in the German market, might move and trade in the US market. And likewise, an investor might choose to trade in the Asian market. So you're just seeing a shifting of assets.
But what's the risk with Germany? It's pretty much a done deal that Angela's going to make it.
Well, we've seen a couple of headline risks in elections with Trump coming in and changes to Brexit. So there's a lot of things that have changed in the way voting happens in today's day. So anything can happen.
Indeed, indeed. Now, there are a number of key central bank meetings this week, including our very own, which is important to us as South Africans. But the key one for global markets is obviously the US Fed. Why is it important, this whole issue of them unwinding their balance sheet? They bought a whole lot of bonds over a long period of time after the financial crisis in order to stimulate the global economy, not just the US economy. And now they have to unwind that. So why is it such a big deal for market analysts like yourself, how they go about doing this?
Well, firstly, there's no change in the policy announcements, so no chance of a cut in the rates. And that's another way of stimulating the market, is either having a hike or a cut, depending on the type of monetary policy that you're trying to implement. Another form is actually cutting back on this tapering, and this tapering has been going on for a lengthy period of time, and that's why it's very important for investors to see how they cut it, what the chances are going to be, and how long it's going to take to cut. I mean, this is an exorbitant amount of money if you have to put it on your mattress, and to slowly cut away at it, I think it's important. It shows that America is moving forward. It shows that the economy is growing healthy, that they can afford to cut it back, that they don't have to inject stimulus. They're not going to implement any rates hike or any cut now. There's still 2 more policy meetings, and I think key will be, as we get towards December, I think there'll be a key indication. So they're still looking for tone, but we've talked about economic data earlier. We talked about markets at all-time high. So it's important that the Fed shows this by cutting back some of the stimulus and bringing it back into a measurable number. We don't know what that number is. We don't know how long it's going to take to do. But it's still a good indication that the economies are recovering in the US.
I'm just trying to visualize how many beds you'd need to stash.
Cover that money.
Yeah. But anyway, gold did very nicely, obviously, during those couple of weeks when there was a lot of risk aversion with North Korea setting things off and all the rest of it. And it's come down quite a lot. It's around just above $1,300 an ounce. But being a trader yourself, do you think it's a good place to be playing in, given that there's so much geopolitical uncertainty?
I think gold offers a safe haven buying opportunity for many investors. It also offers opportunities for speculators to go long and short like they do with IG, my firm. But what I do notice is that a lot of people are shifting into cryptocurrencies and Bitcoins and Ethereum and other currencies like that, which might stir the appetite of people investing or trading in gold. I do think gold has been moving on a lot of geopolitical uncertainty. We've certainly seen this impact in North Korea. So I do think that certain key levels, $1,300 to ounce, will be key. Other key levels that traders will watch, and you might getting a buying appetite. At the moment, we're seeing stronger dollar. What happens? Gold is priced in a dollar-denominated form, so we might see a move to dollar, move to equity or equity markets will stem the flow from gold. So we're seeing the safe haven buyers, so to speak, looking at the equity markets for now, and this can certainly shift with any new news that comes out.
This cryptocurrency business, I can't claim to understand it at all. And many analysts are saying that, in actual fact, it's a little bit of a risky area because it seems as though people amongst your ilk don't even understand it. We saw it lose massive value last week. What's your take on it? Well,
we certainly understand it, and we certainly offer the product from a trading on a derivative point of view. Bitcoin is always used to kind of evade tax evasion, let's say, the South African Reserve Bank, and look at opportunities of shifting money around and used for terrorism, money laundering. However, it's changed. It is a tradable currency like any derivative product that people have access to do it. What does that do? That creates more liquidity, creates opportunities for people to invest in it on a short scale, on a time frame. So it is becoming the new Braai talk, if you want to talk about it in investment terms, and a lot of people are looking at opportunities to either use it as a vehicle to move money around, buy goods, or invest, or trade. So it's a very exciting product at the moment, and you're starting to see other currencies coming on board, like Ethereum and the likes, and I think it's an exciting time for where the market's going. So I do think it's an interesting product. If you are interested in trading it or investing in it, do some homework. There's a lot of research going around, and it's very, very topical at the moment.
Okay, there you are at the cutting edge. And then lastly, let's take a look at Sibanye. They came out with a statement to say that they're going to be issuing bonds, that Sibanye Stillwater they're now called, worth $450 million. That's a lot of money. And this is in a bid basically for them to pay down existing debt that they incurred when they purchased the Stillwater asset in the United States last year. Now, to me, that sounds quite worrying, paying off debt with debt. What do you think about this whole thing? And I see that shareholders are not happy because that stock actually fell by about 9% earlier.
Yeah, obviously every risk is your debt-to-equity ratio when you're looking at it from an investment point of view, and they've got a high debt-to-equity ratio, which I think exceeds 3 to 1. You want a debt-to-equity ratio of 2 to 1. Anything less than that, if you go from 2 to 2 or whatever, then you're sitting, as we spoke earlier in the break, about lazy assets, too much cash, too much inventory, but these are using too much debt to purchase this product. I think it's a good investment. It's an expensive investment. Remember, they're buying it in dollars, $2.2 billion. It is expensive. Using too much debt is a risk. Looking at the EBITDA ratio, I think it exceeds 25 or 30% of the EBITDA, which is not a healthy scenario to be in. The company is diversifying. It's a great precious metal company. It's done incredibly well. Obviously, investors are a bit shaken by the amount of money they're using, or the debt equity ratio, which is getting pushed out slightly. But then there are other ways of raising capital which they didn't do. This is just another form. They could have gone to shareholders. They could have done a rights issue. There's quite a few other options. Just another option. I think give it time. I think it's a good investment. The company's done incredibly well, diversifying, buying into the other assets, not just being a gold miner, but a diversified miner. And I think this is a good opportunity for the group. Time will tell. It is a big purchase. It is a chunky purchase. As the CFO said, it's a hell of a big purchase, and that's where investors are concerned. I think time will tell. Okay, time will tell indeed. Well, we've run out of time. Thank you so much for your time. Well, that was Travis Robson. He's from IG South Africa. After a short break, Francis has... doing a stellar job.